the question you then have to ask yourself is the stock market really risky, or do I just not have the knowledge?
People join the program.
Yeah.
How much of the, if there's any, failure rate comes from their own mindset?
I would say quite a bit of it, honestly. Like, you have to believe that this is actually something you can do.
When you get on these stages, because you've been on some pretty big platforms, you know,
Yeah.
What is your mission to talk about?
My mission is to demystify the stock market and letting people know that confidence is a currency.
Welcome back to another episode of Attractive Mindset. And today's guest, listen, he's been on all type of stages, all other podcasts. He's an expert in his field, and I'm gonna let him tell you a little bit more about himself. We got Wasi in the building.
What's going on? What's going on?
What's up, man? What's up?
Appreciate you for having me, Rich.
Absolutely.
Yes,
so
sir.
tell
Yes, sir.
everybody a little bit about you.
All right. So my name is Wasi. Obviously, I was born and raised in the Washington, D.C. area. My parents are Nigerian, so I'm Nigerian, obviously. And so I got into the stock market, I would say right around 2014, 2015. So I've been a stock market expert ever since then. I've been working in IT as well. So I have a few IT businesses that I have as well. So yeah, man, that's just a little bit about me, but we can get into a little bit more.
Nah, absolutely.
Yeah.
And so the first thing that popped in my mind when you said stock market is math.
Yeah.
So you have to be really good at math for the stock market?
Yeah. Well, I wouldn't say really good at math. Funny enough, I did grow up being really good at math. I was really good at counting numbers and things like that. I actually won a few like math competitions as I was growing older. So, you know, I guess counting and just all things math was just always just intriguing to me. But as far as the stock market itself, I mean, I think math is important, but there are some other things that are also important in the markets as well. You don't have to necessarily be the strongest in math specifically to be successful. I think there's some other skill sets that you need, you know, pertaining to the stock market. But you know, math is one of them.
Okay.
So, yeah.
No, that's dope.
Yeah.
So I've been to DC twice, and
Yeah.
it was to go to like the Afro Code Skyline type parties and all of that. But the DC area has like a bad rep though.
A bad rep, as in like
it's low key ghetto. You know
low
what I
key
mean?
ghetto.
Yeah.
Wait, when's the last time you've been to DC though?
2 years ago in December.
Okay.
Yeah.
Ghetto is a crazy word for DC.
A little ratchet. The hotel that I went to was nice, but it was across from some construction being done. Okay. And it was like low key hood. It was nice, but it was hood. And so that's where the ghetto like mixes in there.
Nah. I would say DC is probably far from ghetto, but we do have a lot of culture in the city. I currently live in North Carolina, so I moved quite a while ago, but I mean, I'm still repping the city. So
got you.
Yeah.
Okay. Fair enough.
We have great food too in DC, man.
Really?
It's a big food culture.
It's a foodie spot out there.
Absolutely.
I've never heard that about DC.
Absolutely, man. Yeah, DC's great for foods, man.
So what's like a staple food out there?
Well, I'm a little biased, honestly. Being African, I love Nigerian food.
Fair.
So, like that's you know one of my favorite things to eat, but I would say there's a pretty heavy like Asian.
Really? In DC?
In DC, yeah. Yeah, some nice Asian food. Then you have, you know, your Jamaican food.
Okay.
Right. There's a couple spots out there that are really busting for sure.
Okay. So why the move from DC to North Carolina?
So I graduated from Howard University.
Okay.
And then shortly after graduating, I got a full-time offer at an IT company in Charlotte. So I was asked to relocate, and I always knew I wanted to leave my comfort zone, which was DC at the time, just because I knew that you know, if I could leave now, I always had the opportunity of coming back.
Yeah.
You know, I think a lot of people are typically stuck and complacent within a location because it's just what they know, you know? And I think, you know, to find areas of, I guess you could say deeper success, I think there's sometimes a need to kind of leave where you are. If that's your physical location, if that's a mental location, right? If it's a way of thinking, something has to change, So I believe, or at the time I believe that, leaving the DC area was going to be beneficial for me to, to get to the next level in life. So once that opportunity came, I just took it. So that's how I went from DC to Charlotte. What's up, y'all? This is Wasi of Option Snipers University. And if you've made it this far into the episode, you're definitely going to want to learn more about our program. So all you have to do is go to optionsnipersuniversity.com. And you can also send me a DM on Instagram at wasi.akin. And go ahead and book a call with me. Let's chat soon. Peace.
Got it. Okay. Yeah. No, that's dope. And would you say your parents are more culture oriented as far as like when it comes to Caribbean parents? A lot of them, and we've had a lot of people on here with Caribbean parents where they want you to be a nurse or a doctor or a lawyer. Did they want you to go into any of those fields?
Yeah. So I mean, I would say my parents kind of did it. I guess. My parents are entrepreneurs. Okay. So they started off in entrepreneurship. So they had the understanding of, hey, you got to go out and get it.
Yeah.
You know what I'm saying? But as far as like just industries itself, my mom actually made me her IT technician at her daycare.
Oh, damn.
She owned a daycare. Like I said, she's an entrepreneur. So she made me her IT professional at her daycare. I was only like 8 years old.
Damn.
So I was like, pretty much handling anything she needed for her business regarding computers. So typing up newsletters, fixing computers at the daycare for the other kids to work with. Like, she kind of got me on the ground running pretty fast, as far as that's concerned. So, but yeah, so they kind of got me into the idea of being more of an IT professional, right? Computers and internet was like more like popping at the time, you know what I'm saying? So, they never really pushed me into they never pushed us into being a doctor, me or any of my siblings,
Gotcha.
Stuff like that. It was really just more so, figure out what makes money and do that. It wasn't necessarily just become a lawyer or become a doctor or become, an engineer per se. So, that's definitely, popular in our culture.
Yeah,
in
Nigeria super popular,
for sure. So. But yeah, I went a little bit of a different route. It's now considered the norm now.
Yeah,
tech is more so considered the norm now. It wasn't necessarily when I was growing up because it was just so new.
So what made you choose IT? How'd you fall in love with IT? Because you said 8.
Yeah, man. My parents bought me this Hot Wheels computer. It was funny because I was really into like race cars and stuff like that when I was growing up. So my parents bought me this Hot Wheels Windows 95 or 98 computer. And I started using that. And then my mom got me this typing program. It was like Mavis Beacon or something like that.
Okay.
So then I ended up learning how to type, the way that they wanted you to type with the keyboard. And so that pretty much was like, where I would put a lot of my focus after I left school, right? Like after doing my homework and stuff like that, I'd hop right on the computer, and just kind of just get creative, you know what I'm saying? Creating games, doing different stuff like that. Yeah. So it was pretty interesting, being innovative at such an early age,
Got it. And so I learned from somebody else that was on the podcast, IT, tech in general has so many different subcategories.
Yeah.
So what category would you say is like your main focus?
I would say my main focus has been software.
Okay.
So, basically fixing issues that are user facing, right? So anything dealing with like a user interface. So, things like creating websites.
Got it.
Email management, social media, stuff like that.
Got it. So you don't deal with white labels necessarily, like the GoDaddy or not GoDaddy, the Go High Level kind of vibe?
Well, I mean, within all of my businesses, we use ClickFunnels, which is a Go High Level competitor. But yeah, so I mean, but that would be within software as well.
Okay.
So yeah.
Okay, no, that's definitely dope. So now you leave DC, you go to North Carolina, you get into IT. You're working for that company. How did you start to scale into your entrepreneurship journey?
That's a great question. So basically, you know, around the time when I started, there was a lot of motion going on in the stock market. And so I called my brother-in-law, who's also my business partner, and I was talking to him about, you know, some of the company stock that I had that were now increasing in value, you know, over a short period of time.
And what made you get those stock?
Well, the company gave it to me.
Got you.
Through,
Okay.
You know, obviously through being hired. So that's kind of where I started to like look a little bit deeper into the stock market. Like, wait, so I could buy something and then over time it could grow, you know, because of the potential success of the business. That was really intriguing to me, right? And I went through all of grade school, all of college, was not taught anything about the stock market, just like most people potentially watching this podcast, right? Literally learning nothing about the markets, but it took actually watching money grow over a steady and longer period of time that allowed me to really like look into this. Like, let me check this out. So like I said, I hit my brother up and I was like, hey, do you know anything about the markets? And then he, you know, he explained a little bit more for me as far as, essentially how to make money from the markets. And so that's kind of what got me started on my journey.
Got it. Okay.
Yeah.
Yeah. I know absolutely nothing about the stock market at all.
Exactly.
You know, and
most people
I'm bad at math.
Right.
I'm good at making money, but I'm bad at math.
Right.
And it's like, where I get confused a lot too is stock and crypto. And so what's the biggest difference between stock and crypto?
Yeah. So the biggest difference is that crypto is decentralized. So there's no financial backing behind it from a government perspective. Right.
Got it.
Now with stocks are backed by actual companies. So like when you have a Microsoft stock, that's, you know, the stock of the actual company, whereby there are shareholders that essentially invest in the company. Right. And so based on whether the company is doing well, then there would potentially be more shareholders that would then drive up the price of the stock, right? If the company potentially is doing bad or just has a bad reputation or maybe some bad news in the markets, then you would potentially have shareholders back out, or some shareholders lessen their position in the stock, to whereas the stock would then decide to fall. So that's the difference between the two, pretty much. Cryptocurrency is pretty new. So like I said, being that it's decentralized, it's essentially looked at as far as a hedge against our US dollar, which stocks essentially aren't. So, you know, I would say that would be the main difference between the two.
Got it. Okay. Yeah. Cause like I was still trying to keep up also with the, I think his name is Roaring Kitty.
Roaring Kitty.
With the GameStop thing.
Okay.
And he was going against all the other hedges and trying to keep GameStop alive. And everybody's going crazy because he was like fighting for the people, but I didn't understand like the whole concept of it. Like,
the whole concept really is that it's believed to be that we have institutional traders, institutional meaning essentially big hedge funds, right? People that have billions and billions and trillions of dollars, right? That they essentially control the markets or essentially are able to move the markets. So someone like Roaring Kitty essentially is when someone like that would say they're a man for the people, it's more so the idea of Robin Hood, right? Robin Hood meaning, you know, we're going and grabbing our money back for, you know, for the people, essentially. You know, this idea of like essentially being a financial superhero, per se. So when groups come together and like essentially, I don't want to say collude, but basically like group together and you know, essentially have all of their money together in such a way that they then invest in one thing all at the same time, so that they can all gain from it. They're essentially using the same tactics that the institutional traders are doing.
Got it.
The big money people are doing. So it's essentially, you know, when in Rome, do what the Romans do, right? So it's like, if this is how they're making their money, we're going to decide to come together build a little army per se, right? Then do the same exact thing. That's essentially what that is. Okay. So that's what happened with GameStop. That's what happened with Dogecoin.
Okay, yeah, right?
You remember that? That's sometimes what happens with Bitcoin here and there. Whereas Bitcoin now is a lot more stable when it comes to, you know, even having countries investing in Bitcoin now, such as Venezuela, right? So, you know, those are some of the intricacies of it.
Okay. Yeah. And then what is the difference in that and what Jordan Belfort did on Wolf on Wall Street?
So with Wolf on Wall Street, if I can remember correctly, they potentially were trading options, right? And so
okay,
that's essentially what we do at Option Snipers University, right? Where essentially we're able to make money based on the leverage that we own with the options. So small moves on a specific company or an equity will still allow you to yield larger amounts of money based on essentially how fast those movements occurred. Right. So it's a little different from just owning a stock and saying, okay, the stock went from 100 to 101. I earned $1. Right. Now with options, essentially you get paid based on how much leverage you have. Right. But then also how fast and volatile the position that you owned went into your direction. Right. So if you have a stock that essentially early in the morning, there are buyers and sellers that are seeing the stock go up, right? But before it goes up, you decide to invest in it, right? If then the market starts to what we call rally, which is where there's a huge inflow of orders where buyers start to drive the price up, your options contract goes and increases in profit even much more significantly than just the stock does.
Got it.
Because you invested earlier than, you know, potentially someone else.
So the bull and the bear still apply to option.
Yes, they definitely still apply to options. So yeah, that's pretty much the idea. Some people call, at least as far as gaining an understanding of options trading, some people call it side betting, right?
Okay.
In the sense where, you know, you have two people, let's say two people playing one-on-one. You have the Bears and the Bulls playing one-on-one, right? They're scoring buckets, right? They're scoring the buckets, right? So they're the ones that are actually playing. So people that actually are owning the stock, they're playing. But we that are side betting is saying, okay, I bet that the Bulls are going to go up by 5 points faster than the Bears will. Potentially, right? So if we have that bet, right, and I'm the one that's betting on the Bull side, you're on the Bear side, the faster the Bulls go up, right, the faster the person that's a Bull is scoring the buckets, that's how much more money I'm going to be making.
That's a good analogy,
right? You see where it is. So while they're scoring buckets, which is what the stock price is, I'm on the side trading options, right, leveraging someone else playing. So I'm not the one playing the game,
like the middleman.
Exactly. I'm not the one playing the game of basketball, but I'm still able to generate profits from it because I'm essentially believing in the direction in which, or choosing the winner.
So you're like the coach.
Exactly. Well, not necessarily the coach, but more so like the GM per se.
Fair enough.
But that's essentially how you would see options, really.
Okay. Yeah. No, that's definitely interesting. I've never heard it put that way, but that makes more sense. It made it clear for me because I middleman with my businesses the same way. Right. So it's like, all right, cool. You put this here and there. And so, you know, I feel like there's some TV shows that talked about people being able to influence that.
Yes.
And so how do you avoid that and not lose money when dealt with those type of situations?
Yeah. That's a good question. I mean, for what it's worth, what we teach at Option Snipers University is that we're not looking to beat the market. We're looking to partner with the market.
Gotcha.
Okay. You have someone like Nancy Pelosi, who is a government official, who I would say is one of the best options traders that we have.
Wow.
Right. This is a elderly white woman that essentially is able to govern policy and things like that would then, you know, be able to reap bountifully off of her own policy. So she's essentially writing her own checks, kind
Yeah.
of, right? So instead of saying, how do I beat Nancy Pelosi? All you have to then do is just go online, and there's her trades are actually public. Her trades have to be public. So you could actually see what she's trading and literally just follow her trades and still be able to make potentially the same amount of gain that she is. Right?
Really?
Yes.
And so if it's that easy,
is public.
How come more people don't do this?
Well, it's called a lot of people say that stocks there's an R word for it. What's the R you would say? When if I were to say stocks are, or trading in the stock market is
risky.
I had this. Okay, you're rich and we just met recently, right? So how did I know that you knew that?
Because everybody else.
So there's your question. There's your answer. There's your answer. For what it's worth, if you avoid the risk, you avoid the reward. The problem is that a lot of people are afraid of deciding to venture into trading in the stock market simply because of a lack of knowledge, right? So the question you then have to ask yourself is the stock market really risky, or do I just not have the knowledge, right? So that's essentially what you have to think about when you're looking at just anything in life. Like you're going to need confidence to do anything.
Absolutely.
Right? The reason as to why you're successful in all of your endeavors, right, in video production and things like that, is because you're confident in your ability to do so. Right?
This is true, and I'll even caveat that is I'm confident in my ability to lead others and their ability to operate what the other stuff is. And I feel like with the stock market, the same way, the way I look at it, and it's weird because I deal with it in my industry the same way, is how do you navigate a world where so many people are like, oh, I'll teach you how to do this, and they're not really doing it. We have a lot of people that aren't doing what they say online, fake coaches and all of that.
Yeah. And I think what you really have to look at typically is the results of the people that they're teaching. Right. So like for us, we have a lot of different testimonials of people that we would ask, hey, prior to joining our community, what would you say about the stock market? They would also say the word risky. Right. Yeah. But I typically have an acronym for the word risk, right? And what that is there's an R, right? RISK, running into situations knowledgeless. Okay, running into situations knowledgeless. Everything is risky if you don't have the knowledge.
True.
If you get behind a car right now without the knowledge of knowing how to drive,
oh yeah, that's a big risk.
How risky is it for you to get on the road and potentially get in an accident?
100%.
Correct? Right? So it's really just going to be about the idea of getting the knowledge that allows people to become successful, right? And so the whole idea of then weeding out bad information is seeing where the fruit is, right? Like if you have a good tree, right, it's going to bear good fruit, right? So if you're looking at the idea of saying, okay, I want to learn about the stock market, you're really just going to have to see who's actually learning and applying this information and then actually becoming successful with it, asking them where they get their information from.
Got it.
That's really the key in my opinion.
Okay.
So
when people are looking at teachers, if they were to come to you and be like, hey, I'm trying to learn how to do options and trade and do all of that stuff. How do you articulate to them that what somebody else that they've seen doing something may not be 100% wrong, but there's multiple ways to do something?
Yeah. So for me, I think for what it's worth, the way that we teach options and the results we yield, we actually don't have the same program or even competition, really. So it's hard for us to even, I guess you could say, compare ourselves to other individuals just because what we offer is completely separate.
So what makes you different?
So what makes us different is that we actually trade with our students. And this is where the testimonials and the good the good reputation comes from, is that we're actually in front of our students all the time. We don't just hide behind a course, right? The reason as to why you can be able to stand on your word is because your word is actually alive and breathing, right? Yeah. So for us, for our students to hear from us every single week, they know that we're never going to be leaving them, hanging out to dry based on the fact that they just only have a course, right? They're literally trading with us on Mondays and Fridays, right? Every Monday and every Friday, they're hearing from myself and my business partner, right? So that's one. Two, we actually have a content library of hundreds of videos of us going over step by step the tactical trading track of how to become a trader, and then also how to then advance in your trading, right? So with most individuals, they have potentially a course, and that's just one thing. For us, because we're also trading, our course material is live and breathing, meaning that it updates, right? So every time we have new information, we then update our content library, allowing our students to then partake in even our own evolution as master traders, right? And I think that's one of the key differences, between what we do versus, just other situations out there. So then lastly, we actually host our students live and in person. So you can actually, shake hands, talk, have conversation, and get live and indirect feedback pertaining to your trading. See, here's one thing with trading. A lot of people isolate themselves and believe that, all they need is just a strategy to become a successful retail trader, right? And when I say retail just means simply someone that's not institutional. Okay. Meaning you're not backed by billions and trillions of dollars, right? So most retail traders, at least new people, believe that for them to be successful, they just need a strategy and then trade on their own. With us, we believe that we're actually successful as the result of a community. So what we are able to do within our community is compound our confidence, because that's what we believe is what creates the cash flow. Gotcha. Compounding our confidence is what creates the cash flow, right? So the way that we compound our confidence is that when someone else is winning, right, it allows you to see that this is still something that you could be profitable doing, even if you're particularly not winning on that specific day or that week per se.
So right? What it sounds like is options is for options are basically sports betting for entrepreneurs.
No,
that's what it sounds like. That's what it feels like. Because I mean, hear me out. Hear me out.
I like where you're going with that, though.
You got players. So let's say it's like the NFL, and they got a parlay, right?
Yes.
And they got to do something and say this person is gonna throw 2 interceptions or throw something like that. These companies are people. Run by people that you don't know. Yeah. And so you have to make an educated guess based off of their movements on how they've played for the season and whatnot. Yeah. How's that not sports betting?
Okay, that's amazing. I like that you said that. And then specifically because sports betting relies on human effort. And the stock market does not. The stock market does not rely on human effort. What am I saying? With sports betting, when Steph Curry rolls his ankle,
true,
your parlay is shot.
That's done. It's done.
Right? Like you have a parlay, and the only thing you have on that parlay is Steph Curry makes 1 3.
Yeah.
And all of us here in this room know that Steph Curry makes maybe 5 threes a game.
Yeah.
Okay. First quarter, they do the jump ball, right? Buddy Hield is in the corner. He passes the ball. And then Draymond Green sets the screen. Steph Curry potentially steps on Draymond Green's foot by accident, rolls his ankle.
Damn.
Your parlay is shot. It's over. It's over. There's nothing you could do. Now, you've put maybe $2,000, $3,000 on this parlay, right? Just for Steph to make 1 single 3-pointer. And because of the human effort, right? That's where you come into ruin, really, right? Now, with the stock market is different because the stock market relies on trends, right?
Okay.
So when you have trends in the market, you're able to see specific patterns and specific movement and things being repeated over time. Okay. For instance, there's something in the market that I call key psychological levels.
Okay.
What that is that means that there's typically an interaction in the market based on these key psychological levels. What are these levels? These levels are round numbers, right? So in the stock market, we're currently at around 6,000 for the S&P 500. The 6,000 would be what I would call a key psychological level, meaning as we get towards the 6,000 level, something is going to happen, whether it's going to go significantly up or significantly down.
So 6,000 is the highest.
It's not the highest. It's just a key psychological level because it's a round number.
Got you.
Another round number, 5,000, 550, right? 560, 570. Literally, like with the price of the equity or the stock would have a 0 at the end of it potentially, or a 5, right?
Okay.
Because now within the market, there's sometimes where you have 0.25, 0.75, 0.5, right? Those are typically not what I would call key psychological levels. And the reason why I call it that is because let's say we have a massive bull run, right? And we earn about 50 points in the market, right? And this is more points than we thought. Now it's time to sell.
What's the average amount of points?
Well, it just depends.
Okay.
There's not really an average amount of points.
Okay.
Let's just say it's just going up significantly, like past potentially where you thought it would go. Now it's time to sell. Where do I sell if I'm past my profit target, right? For instance, let me say it this way. Let's say you've been potentially sports betting all day, and you know that at some point in time you're going to have to stop doing this because you're getting you're winning too much potentially, right? Let's say it that way, right? And you get to a place where you've made, let's say $480.
Okay.
You generate $480 profit. In your mind, what are you thinking to yourself in that point in time once you've made $480 about your ability to either stop or keep going? What would you be telling yourself about the number itself, the number 480? I wish this number was what?
Bigger,
but then round as well.
Okay, 500.
500.
Okay.
You see what I'm saying? Does that make sense?
It makes sense a little bit. And so you're saying you can guesstimate basically something's going to happen around those round numbers because people like round numbers.
Thank you.
Okay.
It's just that simple.
Really? Okay.
Yes,
okay,
it's
okay,
literally
cool.
just that simple. So I literally ask my students, go back in time, look at all of the what I would call key psychological levels and look at what happened just moments prior to it hitting that or moments after it hitting it, seeing what happens. Okay. Literally, those are that's just one simple pattern in the market that I found. There's some other patterns that you could typically see. We have patterns called double top, double bottom, and you can actually search this on YouTube. We actually have different videos on YouTube that talk about these patterns: double top, double bottom, triple top, triple bottom. This is essentially where you have a stock hitting essentially what I would call a ceiling. It looks like it's hitting a ceiling. It's getting to 100, it'll come down. Then it got to 99, then it comes down. That would be what we would consider a double top. If it didn't get above 100 the second time, then we're expecting it to do what?
Go down again.
Go down. Congratulations, you're an expert stock trader.
Listen, we got some triple tops coming up. If that thing don't hit 100 the second time, it's gonna go to 97.
Down. Exactly.
So how do you make more money off of that situation?
So think about it. If it already hit 100, it came down, and then you're anticipating it hitting 100 again, and it doesn't hit 100, it hits 99. What you're doing is you're then entering that trade, and then you say to yourself, if it does hit 100, 101, I take my loss. Stop out. However, based on the high probability of it being a setup, all I have to do is then wait and see if it climbs lower than that 99. By the time it starts going below 99, you're already making money. Now all you have to do is just sell. You see what I'm saying? Okay. So that's what it is a game of anticipation, but then you're calculating what you would have to see for it to be a loss. And then you're also calculating what you would have to see for it to be a win.
And so I'm going to sound a little crazy.
Go ahead.
But I feel like that's still player controlled.
How so?
We just can't see the player.
But here's the difference though. Again, because it's not human effort, you're able to see it be a pattern and it being consistent. Right?
True.
There's no patterns in sports betting, meaning this. Like Steph Curry doesn't have a pattern for how many times he makes 5 3-pointers, right?
Fair.
So there's no way to really make a risk to reward scenario pertaining to sports betting when it comes to that, right? Now I'm not saying you can't make sports betting lucrative. Mm-hmm. What I am saying is that there's a clear distinction between the two, specifically because with dealing with the stock market, you're dealing with trends, you're dealing with momentum, you're dealing with human psychology, right? As far as levels being hit, and then you're also dealing with the idea that there's actual real live news happening that actually,
but that's what I'm saying. That's why it's player control. Because imagine 2 years ago, everybody like Bad Boys for Life, Diddy, this and that. Cool, I'm here. They on their puff wave. Now, nobody's saying Diddy,
right?
And everybody that's affiliated with Diddy's getting attacked too. And so, what was a staple for Bad Boys is now controlled by a random event happening from one person. And so if the market is following like the trends of certain people or certain things or whatever, and let's say Google, right? And so Google CEO randomly passes away. And that's going to shift the trend, right?
So, I mean, it couldn't or it couldn't, right? And that's the thing. Sometimes you could have an interaction, sometimes you might not. And that's where I believe it's the biggest significant difference, is because with what we do, we're not looking to guess a direction. That's not what we're looking to do. We're looking to identify a setup in which we can then decide we would have the understanding of how much we would be losing potentially, but then also what the gain would be. And that's where the risk to reward comes into play.
Got it.
It's significantly different from sports betting from the standpoint of, even when you do, let's say your parlay does hit, right? If you had Steph Curry hitting for a 3, but then he hits 5 threes, you don't get to inherit the extra of the threes.
Gotcha.
With the stock market, once you're in the right position, your ability to become even increments. Like, for instance, there's some trades that even some people in our community have made where they woke up and we have what's called swing plays, right? This is where you essentially get into a trade the day prior and then hold on to that trade for potentially days, weeks, potentially even some months at a time, depending on the expiration date, right? So there's members of our community that have literally invested in a specific play, put down about, let's say, $500, made 1,000 off that 500, but then before you knew it, boom, the market opens, and then that 1,000 in profit turns into even incrementally more, right?
Gotcha.
3,000, 4,000 in profit.
And what's the percentage that gets taken from that?
Percentage as far as what?
Like capital gains.
So you have your normal capital gains taxes as far as, your regular. So it's really just going to depend on what entity you're using to trade with.
Okay.
So we teach our traders how to even use LLC accounts.
Okay.
Right. As well as individual accounts. But yeah, I mean, your capital gains tax is just going to be your capital gains tax. So
gotcha. Okay. Yeah. No, that's definitely dope. So I'm gonna throw a scenario out there because I want to understand the system. And so when you're introducing new people to a system, and I'm just going off of what we've talked about during the convo, if we have, let's say, I don't know, Attractive Mindset. We're a publicly traded company, right?
Yes.
Listen, we have Attractive Mindset, and I'm supposed to hit 100. But the next day I hit 99.
Yeah.
And then the next day I hit 98. If I have money in it when it's at 100 and it goes down, do I lose money?
So if you're holding the stock itself, you have what's called unrealized loss, which means you would have lost unrealized, meaning you didn't sell your position.
Gotcha.
Right. So you don't really lose until you sell. So if you bought a stock and it went down, like for instance, Bitcoin, let's assume Bitcoin was a stock, right? Bitcoin was up to about, I think, 50,000 some years prior, right? Then it came down to like 30, right? Now we're up to about 90, almost, I think 94,000 now, almost 100,000, right? So did you take a loss if you didn't sell at 30? No, right? You only took a loss if you would have sold, right? So you have what's called unrealized gain and loss, where that's just if you haven't sold yet, essentially. But when you do sell, that's when it becomes realized. That's when we call it realized gain or realized loss.
And so now with the options, if I'm correct, you're able to do a call.
You do a call or a put. Now, a lot of people don't really know the difference between the two, right? Now, if I said, you know, I need you to call someone up, right? You don't say I want to call someone down.
Call someone up.
I need to call somebody up, right? So call means the market is going up.
Got you.
Very easy way to understand this, right? If you want to put something, do you put something? Well, some people put things up, right?
Some people do. That's a Caribbean term. Only Caribbeans say, "Hey, put that up."
Put that up, right. But if you're talking to a child and they have a knife, you're going to tell the child to do what? Put the knife down. Okay, so puts means it's going down. Okay. Calls go up, puts down. So if you're purchasing a call, you're saying that you believe that stock or equity is likely to go up over time. If you buy a put, that means you're believing that at that given time you're buying it, that you believe that stock is or equity is potentially going down. So that's the difference between the two.
Okay, so
now the stock market has been known to go up, I believe 8 to 12% every year, on average, right? However, with options, which is different than just the stock market, right? I mean, which is different than just regular stock trading. With options trading, you can actually also make money as a stock is going down.
Got it.
Right. You can actually make money faster when stock is going down, because when the stock is going down, it goes down faster than when than it coming up.
Got it.
Right. And so that's why with options, you're making money based on how fast things are happening, which is what we call volatility or momentum. Right. Because if it's going down fast, right? If after, like, for instance, after the election, right, there was the market obviously rallied, right? The market went up pretty significantly, very fast. So if you were someone that was investing at that point in time, and you invested in getting calls for the S&P 5 for the entire S&P 500, then your money would have gone up very significantly in a very short period of time.
Got it.
Because of that news related event, right?
And so you're able to pull it out as soon as that happens?
Absolutely. Okay. Absolutely. So with options trading, what you can do is that once you make your money and you sell your position, you're actually able to transfer the money directly into your bank account immediately afterwards, literally in seconds, right? So then your money would transfer to your account the following morning.
Wow. No, that's dope. And so in the scenario, like, and again, this is me not knowing anything about this.
Yeah.
Please, YouTube, spare me. What happens in worst case scenarios like a stock market crash like 2008?
Yeah. I mean, well, so the idea of the stock market crashing, again, is still good for a stock market investor.
Really?
Right? Yes, absolutely.
If you're in it already or if you're wanting to get into it?
Both. Both. I mean, if the market is going any direction fast, right, either up or down, then you're going to be able to benefit from that as an investor, right?
So then why did so many people freak out in 2008?
Because not everybody is an options trader.
Got you.
Right? Because if you only own stock, because for instance, this, right? There's two things, right? Having a company that you're working for, they give you their stocks. So once a company gives you their stocks, then your ability to be profitable with those stocks is only if the company performs well, or if the stock performs well, rather.
Got you.
That's the only way you're going to make money on that stock, is if it performs well, meaning if the stock goes higher in value. Now with options trading, it's different because if you purchase what we just talked about, which is a put, where you're betting that the market is going to go down, then now you're being profitable for it going down versus not just going up. So most people that are in the stock market are not options traders.
Got it.
So you can't benefit from the downside if you're not an options trader. That's where the freaking out, I guess you could kind of say, comes into play. Right. So someone that has been working for a company for 60 years, right? 50, 60 years, they're near retirement. They've invested in that one company stock their entire lives, right? And then in one day the stock market goes down, or there's some bad news about that company that literally cripples that company's stock price. It's over.
That's lost.
It's over, right? So that's really where we say that options gives you leverage, because now you're able to be fluid in your decision making.
And so they can't change to somebody with options?
Say that again?
I don't even know if I said that right. They can't. And so if they're the person that's been working for this company, 40, 50 years, they can't become an options player in that company?
They could absolutely become an options trader.
Okay.
Every person can become an options trader.
So what would happen to their stock at that point?
So what you would have to do in order to trade options, at least with that stock, you'd at first have to potentially sell your positions, or at least sell potentially a portion of them, right?
Okay.
Let's say you have $10,000 in Google stock because you work at Google, right? Well, Google gives more stock than 10,000, but let's just say you have 10,000 worth of stock. An idea could potentially be you sell half of that, take that 5,000. Now you can trade options with it. Trade your options across the market, potentially with the S&P 500, or maybe another company, Apple, Amazon, Facebook, Netflix, whoever. Invest in a potential options trade and watch that 5,000, multiply potentially, so that you can add to your stock balance.
That's dope.
That's another strategy you could use.
So when you make money so what's an exit strategy for somebody who does options?
Exit meaning exiting the market in general.
I mean, I guess exit as far as like you can't do that forever, because
you talking about like being a trader, like an exit strategy as a trader?
Yeah.
That's a good question. So I think for what it's worth, there's different strategies you can use as far as, I guess an end game per se as a trader. For the most part, I haven't really seen a trader retire though.
Really?
So the thing about it is the ability to trade in the market essentially starts to change your idea of even how you view money and time. So now you have to ask yourself, how can I make more money in a shorter period of time than what I'm already doing with trading? And for most traders, they don't really have an answer for that.
Got it.
Now, outside of just day trading, there are things that you can do as far as long-term investing called leaps, where you can actually buy a specific call or put in a company that you believe in potentially over a longer period of time, and invest a larger amount of capital into that company and watch that options trade continue to increase over time, even more than just the stock. So for instance, if you do believe in Amazon per se over the long term, let's say into 2025, at least from where it's at now, instead of just buying Amazon shares, you can buy what's called a leap, what we call a leap, which is buying a call of Amazon at a strike price, and then an expiration date that's potentially 6 months to a year out. Right.
Gotcha.
So if you believe that it's going to continuously go to the upside, then for the most part, you're going to see a larger percentage gain than just owning the shares itself.
Got it. And so what would make a company like an everyday company, and say again, attractive mindset, if we were to go public, how would I get to a level of GameStop or Google or something like that?
As far as like shareholders, as far as
like how would that benefit? How does I'm trying to understand the dynamic of how a company begins to influence the market.
I mean, we're talking about things like news, things like earnings reports, things like that. So, for instance, if Apple has reported a good earnings for their quarter, let's say they just released their iPhones or something, and because they're $1 trillion company in the market, they're going to be influencing the market as a whole, right? Because they're in tech. Same thing for a company like Amazon or Google, right? If there's some great Tesla is another one. Okay, with Elon Musk. In fact, Elon is a great example of a great options trader as well. For what it's worth, he was able to now become 3 times richer than Bill Gates as a result of the election. What happened during the election? The Tesla stock increased significantly. So the shareholders of Tesla decided to increase their investment into Tesla, which allowed Elon to then continuously, to grow his wealth.
That's crazy.
Yeah. So I believe he 10x'd his.
So then what happens? Okay.
I believe from like 2 billion to 20 billion.
So a scenario just popped in my head with you saying that. So what happens if he now, I don't think it would be even possible, really realistically. Let's say he has 400 billion and he decides to spend $398 billion and then everybody pulls out or cashes out on Tesla. Where would that money makeup happen?
I'm not too sure I understand your question.
I'm not sure I understand myself.
But here's something though, right? Elon, obviously he purchased Twitter. Remember that? He purchased Twitter, he renamed it to X. During that period when he purchased Twitter, the Twitter stock actually plummeted a bit for a while, right? So it was the news of him purchasing Twitter and Jack Dorsey, I guess, stepping aside as far as being the CEO that had a negative impact to the Twitter stock in the market, right? So that then decreased his net worth.
Got it.
Right. So that's typically the trade-off, right? Okay. Now, obviously, the reason why he purchased Twitter, well, most say is for tax reasons, obviously. So there's obviously the benefit of having a way out. Obviously, if he didn't buy Twitter, his tax bill would have been significally more than potentially how much his net worth dropped. So that's a
whole different level of conversation. Let me buy a whole organization just to offset some taxes.
That's next level, bro. You know what I'm saying? And I believe we as a community can definitely get to that level.
No, sure. Definitely. This whole conversation was definitely eye-opening and in a different type of way. I think we've had like one stock person. We get a lot of crypto people on here. Okay. And I used to confuse the two all the time. I got luck. So I'm going to tell you a story.
Okay.
I don't like sharing this story because it hurts. So I'm a heavy gamer.
Yeah.
And me being a gamer, basically, we used to deal with Bitcoin a lot when Bitcoin wasn't even popular. It wasn't anything.
Yeah.
It was just here, I'll pay for this online and, whatever. And you could do it through here and there. And so I had some pieces of Bitcoin and it's just like, whatever.
Yeah.
Throw it away.
Yeah.
Versus now, no Bitcoin. And Ripple early XRP. On. I got into Ripple when it was at 2 cents.
Okay.
And I don't know. I didn't understand the market, just like you said. I didn't have the knowledge. And I had a decent amount in there. And it went up to $1.23 or something like that. And I just saw extra additional money at the time and I cashed out.
Yeah.
And then it started going crazy. It started doing all other type of stuff. And so to me, things that are like super volatile like that or influenced like that is not like sustainable, which is why I asked about like exit strategy, because I feel more comfortable living in the realm of entrepreneurship where, okay, if I create a company and I hire people, if that person doesn't do what I need them to do, you can get out. You can go. Versus a market where I have to be influenced by news or somebody else, something somewhere happening, global warming, and everybody wants to decide to pull out stuff and put stuff, whatever. I feel like that's where most of the fear comes from. And so, I say all of that to say, when people join it's an academy?
It's a program,
When people join the program, how much of the, if there's any, failure rate comes from their own mindset?
I would say quite a bit of it, honestly. Really, like, you have to believe that this is actually something you can do, right? I actually prefer to teach people that believe it, because it's easier for them to digest the message versus having to convince you that this is something that you can be profitable from. You're kind of shortchanging yourself from the door, right? And for what it's worth, the way we teach it and we implement it, there's actually low cost ways that will allow you to not have to leverage your money, your actual money, to still make money, right? So there's something that we use called prop firms, right? And what these do is this allows you to, when you have your banks, right? Your banks, in order to lend money from your banks, they're looking for what? Your credit score.
Yeah.
Right. So they're looking for your history and credit. Now with the prop firms, they give you access to an account not based on your credit score, but based on your skill set. So if you can prove in a test environment that you are a profitable trader over a short period of time, this prop firm will actually give you access to an account size that you can then make money off of, where you would then have a profit split, right? And now this means that you can actually leverage a cash flow vehicle, which I would call these accounts, right? This cash flow vehicle, you can access it for less than $100 a month, right? But here's the caveat: you need to have the skill set in order to access it, so that you can create the cash flow, right? And so within our program, we have quite a few people that were able to get certified and get the certificate for passing the evaluation exam literally within 2 weeks. Right now, most people in our community are already passing this evaluation exam, but the ability to pass it in only 2 weeks definitely revolves around what you just said, which is the mindset and the confidence. Right? Other people could potentially pass maybe in about 2 months or so. Most of our students pass within 90 days. Okay. So really what I've seen, to answer your question, what I've seen as far as the main difference of getting over the fear and actually becoming profitable with it is just the confidence mindset. Right. And this is being confident just as an individual.
Yeah.
Right. I think confident individuals, from what I've seen, even if you don't necessarily have all of the knowledge as far as the market is concerned, once we get a hold of, your ability to think about the market the way you need to think about it, then you just apply your own confidence, right? Your own ability to be confident in just waking up every morning and being the best version of yourself. Once you add that to the strategies that we give, I mean, success is imminent,
So to be an options trader, what does your daily schedule have to be? What kind of time do you have to block out to focus on the market itself?
So as far as for us, as far as trading just in general, we typically like to trade within the first hour to two of the market. So a lot of new traders, what they do is they sit behind the computer by their lonesome, and staring at the screen and just waiting and hoping and guessing in the markets. Now, what we do is a very calculated approach. We have the understanding that the markets are the most volatile within the first hour to 2 hours of the market. So that's the time frame that we focus on. That would be from 9:30 a.m. Eastern till around 11:30 or noon, we would say, Eastern. Okay. So we structure our program to stick with those times, and that's typically the time that we decide to do our live trading with our students as well.
Got it.
For pretty much about the first hour and a half of the market.
Okay.
So we're getting down quick and dirty very quickly, right? We're getting right into the market, so that we could be as profitable as we can.
And how long does it take somebody, a student, to go into profit?
So we would say, like I said, about 90 days.
Okay.
90 days is typically what we like to see as far as being confident in the material and then seeing consistent gains.
And do they lose money within that 90 days by like practicing more?
So we have a trial period that we advise our students to do, which is what we call paper trading, right?
Okay.
Now with paper trading, you're not actually using your own money. It's a virtualized environment per se,
Okay.
that allows you to essentially get into the trades as though it's real money, but it's obviously fake money, right? So you're not leveraging your own money. But the reason why we do this is so that you can get used to clicking the buttons, looking at the strategies, watching the chart, right? Seeing the setup that you want to take or get used to, and then become profitable off of that. See, a lot of traders think that they need to know everything about the market before being successful. And I think that's the main difference with the stock market versus a lot of other industries or a lot of other proficiencies and skill sets, is that for the most part, most people that are successful in real estate know almost everything about real estate, right? People that are successful as being mechanics or barbers know everything about the profession, right? As far as the stock market is concerned, you don't really need to know every single proponent of the markets in order to be successful, right? You don't need to know the differences between a covered call or a vertical or a straddle or iron condor. You don't need to know all of these things in order to be successful. I don't need to know anything about the names I just said in order to be profitable, right? So it could literally be just as simple as buying a call or buying a put, right? So the difference then is that if you can zero in and focus in on one specific strategy, one specific setup, and perfect your ability to watch that occur in the markets, that could literally be all you do, right? If you watch how the S&P 500 moves on a day-to-day basis, or maybe even just the Apple stock, or maybe even just the Nvidia stock, right? If you're watching how it moves on a day-to-day basis, you're going to start to see patterns in the market that will then allow you to make high probability plays in order for your success to be consistent. Right. So with that, you don't really need to learn everything. Like we talked about double tops today, right?
Yeah. Double and triple
tops, right? So
I already understand what it is.
And you already understand what it is, right? So what would you say is a double top then?
Double top is if it's at 100 and it goes down to 99 and then it doesn't go back up to 100 the second day, we call that a double top.
Yeah, not the second day, but the second time.
So the second time.
Right. We would call that a double top, right? Now, with the double top, what that means is we're believing that it should go where?
Back to 98.
Well, what direction?
Down,
right? Now, how do we invest in the downside? What are we getting? Are we getting calls or puts?
We're getting puts.
Puts, right. So now that's literally the simplest basic understanding of a double top. Now, if you know what a double top is, you then also inherently know what a double bottom is, because it's just the inverse.
Okay, so a double bottom is if it doesn't drop down to this.
So let's say we have a drop level of 50, right?
Okay.
We have a drop level of 50. It goes up and then it comes back down, but it doesn't go as low as 50.
Got it.
Then what way are we going?
Up.
All right, and then what do we buy when we're going up? Calls. There you go. Everybody just learned double tops and double bottoms. Now, if you know double and you understand double bottom now because initially you understood the concept of double top. So see, now we're skill stacking. Now we're strategy stacking because you know double tops, you know double bottoms. Now, if you know double bottoms, then you also know triple bottoms because it's really just another step, right? It's just us go. And now what's happening really is that we're seeing a story occur. It's like, think about it like this. It's like a school bully. Over time, the agitation is gonna knock the stock price to the other side.
Got it.
What am I saying? If we get to 100, right? Or let's use double bottom, right? You come to school, right? And you have a school bully. He hits you at 50. You get up. You're like, all right, I'm gonna leave you alone. I'm not gonna hit you back. I'm being the bigger man. You get up from 50. You get up to 52, right? 52. Once you get to 52, he knocks you down again. But this time you're not falling all the way to the ground.
You hit
because
51.
You hit 51. So you're like, all right, he doesn't even hit that hard, right? So by the time you get to 51, now by the time you're getting up even further than where you got up the last time. That's the story that's being told.
Gotcha.
So now that's why you have the confidence to believe it's to the upside now. Why? Because you're telling yourself a story while you're reading the market. That's how I teach my students.
Gotcha.
Is to read the market using stories, because you can understand what it means to have a school bully, right? Now you can inherently understand what's happening during the market when we're seeing a double bottom or we're seeing a triple bottom. It's essentially a school bully. The school bully hits you down, you get up, you go back down again. Now you're ready to fight. You get back up, you get to 60, 70 before you, and that's usually where we start to see the market go crazy.
Gotcha.
Is those usual interactions of, that those things happening, right?
I feel like I can do it. Look, listen.
Yeah.
1,000, triple bottom, Heat, D-Wade, don't matter. Heat and 5. We got it. It's easy. It's easy.
He wants it to be sports betting so bad. He wants stock trading to be sports betting so bad.
No, it's very similar.
That's crazy.
It's very similar. No, that makes sense. You clarified a lot. And so, one of the last things that I'll mention is when you get on these stages, because you've been on some pretty big platforms, what is your mission to talk about?
My mission is to demystify the stock market and letting people know that confidence is a currency. Like I've learned that confidence is really the currency to anything, right? So when I talk about the stock market, I talk about it in such a way of control, and it allows people to understand, like, wow, you don't seem scared about this. You don't seem timid. Why do they say these things? Is because they're evaluating my confidence level. That's what allows people to even believe it for themselves, because what I'm allowing people to do is borrow belief. I'm allowing my students to borrow belief. If he believes so strongly in this and he doesn't have two heads, I can be somebody that can do this as well.
100%.
Right? That's the whole idea, right? I mean, think of it this way. The reason why most people have podcasts is because they're seeing representation in it as well, right? Already seeing that there's people that can be successful in this. Now you have the confidence to say, okay, I could also be successful in this too. So that's the main message: demystifying the stock market, but also letting people know that confidence is a currency. For instance, we're both Black men that we need our haircut, right? If you step into a barbershop, right? You step into a barbershop today, you need a haircut today. You're in a brand new city, nobody in this barbershop, but somebody told you to hop into this barbershop, right? You're looking around. You're identifying who you want to cut your hair. This is a very big event you're about to go to, right? You're looking around, checking to see who you want to cut your hair. What's one of the main things you want to see in that time span?
If he's Dominican? That'll be my go-to right there.
Okay. So what would be this person's attitude just while they're cutting hair? What would you want them to exude?
Attention to detail.
Yeah. Okay, what else?
Clippers sound good. Attention to detail. They're looking. They're asking you questions.
Okay.
Is this good? They're checking before they do a full on cut.
Okay.
Like just assessing the situation.
Now, what's their energy levels? Are they timid or are they vibrant?
Definitely not timid. I mean, I guess I wouldn't need like vibrant, because even my cut now, he's not the most like happy-go-lucky, vibrant person, but he has that super attention to detail.
When I mean like vibrant, I mean just the opposite of unsure.
Okay, yeah, definitely not unsure.
Right.
Yeah, definitely
the opposite of unsure. Right.
Yeah.
So if that's the case, right, what that tells me is that what you do when you enter in is you're looking for someone with confidence.
100%.
Who is confident enough to almost cut my hair as though like
they've been doing it.
That they've been doing this for a long time,
Gotcha.
right? That's what I'm allowing our students to grab and grasp, because once they take a hold of it and they realize, wow, I can actually do this, then that there's so much more of an achievement from that standpoint. Because think about it this way, right? Everybody has bought a house. So the idea of becoming a real estate agent, we have tons of realtors now, right?
Credit people too.
We have tons of credit people. Why? Because everybody does
too.
Life insurance. Why? Because everybody particularly needs life insurance. Guess what? The difference is, and why I love what I teach, is that I teach a shared fear. What does that mean? I teach a skill set that everybody's fearful of, because a lot of people just don't have an understanding of it. So by the time that they grasp it, now it becomes more valuable to them. Now you become someone who is increasing in value. Why? Because if you were to ask somebody, okay, pick up your phone and call somebody that that can multiply money with money. most people don't have that person in their phone. So now what we teach is the ability to become that individual. Mm-hmm. Why? Because then money then gravitates to you. If you are able to consistently make profits, multiplying money with money, you you innately know that most people don't have that ability as well. So that's what allows people to, gravitate funds to themselves. And
so let's say I look at your numbers and I'm like, I call you up. I'm like, yo, Wazzy, I have 100,000. Here's 10,000. I want you to put 90,000 in. Would you do that for people?
Wait, say it again.
Like, people can pay you to basically do it for them. For the people who want it on autopilot. Like, I don't know it. I don't really want to know it, but you know it. And I've seen your numbers. You multiply it. Like, I'm going to pay you whatever your rate is, and then you make my money multiply in this kind of way.
Yeah. So there was a time that I did that.
Okay.
Like earlier in my trading days, I would say maybe upwards of maybe 2019, 2020.
Okay.
But I've been focused more on the skill set, more so because I'm more invested in changing people's lives from the inside out versus, just, I guess, essentially providing a service for just, I guess, generating funds per se. And then also it's just going to be more lucrative for me to trade my own money anyway, right? Because I don't have to split with anyone.
True.
I think typically when trading other people's money, you fall into the trap of having the understanding of like, man, I could actually make this money on my own. So then over time, it makes less sense to trade other people's money because it's like,
the way I'm thinking of it is like, and again, this is how I run my company the same way. Sure. And so I used to be a shooter. I mean, I still shoot every now and then, but I'm like, yo, I only have 24 hours in a day.
Right.
No matter what, let me go out and find other shooters that can do the same thing better. If they can do it better, even better. And now I send them out to go do stuff. So that multiplies my time.
Absolutely.
Because that's the only way you'll get to like a Jeff Bezos, Bill Gates kind of level. And so even from that standpoint, you don't have like a structure where you're like, okay, I have a team. My team is going to overlook this, whatever. We'll bring this in and then do your calls and stuff.
Yeah. I mean, like I said, so what that would be considered as a hedge fund. Right. Where you're actually pulling money together and then have, shareholders within that specific investment that would, obviously gain from that. So like I said, we did have a hedge fund at one point in time. But we're not fully operating it at the moment just because it's just not as lucrative for us at this point in time. Okay. So but yeah, that and here's the deal though. We typically do advise newer traders to be able to do this, especially if you're able to bring this skill set into your family, because now all your family members, you guys all have the same goals, right? As far as advancing in life. Now, if you take it upon yourself to be the one that learns how to multiply money, how much more valuable does that make you amongst your family, right? Amongst your community, potentially, right? The ability to do this. And like I said, this is something that allows people to actually think differently about money. And that's really where my heart lies, is the ability to change lives from that standpoint, right? Not just necessarily just the money per se, right? We have seasoned individuals in our community that, for what it's worth, never thought in their wildest years that they'll be able to be profitable trading stocks, right? We're talking, seasoned individuals of 70 plus, right?
And so when you say profitable, what is that margin? Like, what can somebody, if they have a good year in the market, anticipate?
So we would say, so for what it's worth, once your first payout is going to be $2,000 from your evaluation account. Okay. So once you get past the evaluation account, they're going to pay you $2,000 to start off with, right? So that's from the get-go. So we would typically say within the first 6 months, you could be looking at upwards of 5,000 to 10,000 in profits.
Okay.
Right. So if you expand that out, and then you then also still have a curve of, okay, now I learned what I'm doing. I know what I'm doing. And now I'm able to start to multiply it. Now, the multiplication with what we do with the prop firms comes into play where all we're doing is we're just creating additional accounts, right? So when I said you can have an account for less than $100 a month, if you then have 20 accounts for less than $100 a month, that's about less than $2,000 a month for 20 accounts. With you compounding to 20 accounts, now on a day where you generate, let's say, $500 in the market on one account, you did that across 20 accounts. Now, what's 500 times 20?
I'm not the math guy.
He did say wasn't the math guy. I did. So how I do math too is this, right?
If the first number,
I take the first number and I take the first number of the first number and I take the first digit of the first number and then I take the first digit of the second number. 5 times 2 is 10, and then there's 3 zeros.
I take a calculator.
Right. So if we have 5 times 2, which is 10, then we have the 3 zeros that remain. So that would be 10,000.
Okay.
Right. 500 times 20 would be 10,000. Right. So on a day that on one account you make 500, if all you do is have 20 accounts and merge those accounts. Now the merging is literally just a click of a button.
And this is a day?
It's not, it's a day. It's a click of a button. And it's not you like making 20 different trades on 20 different accounts. This is you making one trade on one account, but it replicating across 20.
Gotcha.
It's like Excel where you type it in one column and then you just drag it and then you get it all. That's essentially the way you do it. Now, obviously, you're going from spending a little less than $100 a month to then doing $2,000 a month, right? Which obviously you have you have to weigh out the payoff in that. Now 20 is the max, right? You can still do 10. 500 times 10 is what? 5,000.
Yep. The way I just looked at him. The way I just
this guy's killing me, man. Right? 5 times 2 is 10, so then it would be 10,000, but then 500 times 10 would be $5,000, right? So obviously, you just scale it pretty much, right? Okay. So, those are the things to typically expect. It's really about the attention to detail because trading is going to require all of who you are. It's going to require, the most of you, but then it's the most rewarding as well because you get to reward yourself with your time back. Right? Gotcha. There's nothing like making, some of my students make $1,000. Like most of my students make $1,000 in a day, meaning like they have the ability to earn $1,000 in a day. Right?
So on average, they can do anywhere from like 25 to 30K a month.
Yes, especially with the merged accounts, right? So we had a student that did 40,000 in a month. Sheesh. And did 120,000 in 90 days.
Wow.
Yes.
So how?
That was with 20 accounts.
Okay.
That's an example with 20 accounts. You see how it goes. Now, if we scale it and we say instead of 20 accounts, they only had 2 accounts, then you would just take off a 0. So instead of 120 grand, well, it would be 4,000, right? Instead of 40,000. So then that would be 12 grand instead of 120 grand.
Gotcha. Okay.
Right. So it's really just going to be about how much leverage you would want to choose and also your confidence level. The reason why he was confident in having 20 accounts is because he sat down, he came to Charlotte, he learned, and he put it into practice, and he believed in himself, and he was confident. And his confidence is what created the cash flow. Like we would see him generate these profits on a normal basis just because he believed he could do it, and he wasn't afraid to go after it. Right. Seeing the reward. If you avoid the risk, you're avoiding the reward. Right. We typically say that the ability to be profitable in the market is just the idea of being a participant.
You said that very Nigerian just now. So you're avoiding the reward. I had to point that one out.
Oh my goodness, y'all.
I felt like I was getting scolded by my parent real quick. I was like, hold on. Nah, I get it though. Now that's super dope.
Yeah. So, here's one thing I would want to say too. What we allow people to do is have a new hope for the next day, right? And I want to be very clear when I say this, right? So with a 9 to 5, we have the understanding that we earned on a biweekly basis, right? Biweekly meaning every other week. We have 52 weeks in a year. This is more math for you. We have 52 weeks in a year, right? What's 52 divided by 2? 26.
Yep.
We have 20. So we get paid 26 times with our 9 to 5, right? Those of us who have 9 to 5s are getting paid 26 times. When I was working 9 to 5, I was getting paid 26 times a year, right? Now, how often are we spending money? A lot more often than 26 times, right? So what's happening now? The difference is we have a skill set with options trading and also with futures trading where we're able to make money every single day, right? Now, in the markets, you have 20 trading days in a month, right? So you have upwards of over 200 opportunities, 200 days of which we would now consider opportunities to make money, right? Versus only just 26 times. Now, how does that change? Like the difference between wealth is just how fast money is being made.
True.
Right? Because most people who are 50 years old have potentially made $1 million over the course of their lifetime, but you wouldn't consider them a millionaire because it took their whole life to earn it.
Fair.
You would consider someone a millionaire because it takes them a short period of time to earn $1 million, right? So how could you become a millionaire in a short time? Well, if you have a lot of opportunities. If you only have 26 opportunities, you're potentially not going to become a millionaire, right? It's just a numbers game at that point.
Yeah.
If you only have 26 chances, you have to make those 26 count. Yeah. So you're potentially going to have to look at becoming a doctor, a lawyer, something very, very high level.
Even to
earn, right.
School costs.
Exactly. Yeah. Because 1 million divided by 20 is what? Like,
this man just throwing math numbers out there. Like, yo, 1 million divided by 20. Somebody finna get that on the spot. You would have said that shit on the spot, Sims. I'd have been like, bro, come on.
1 million divided my man, like, what are we talking about? 1 million divided by 20 is, I believe, 50,000. So each paycheck would have to be 50.
I gotta check that because if you got that right.
Yeah, it's either 50 or it's 50. It's 50,000. 1 million divided by 20, right? What is it?
It's 50,000.
It's 50K. All right, bet. So 50,000. You would need each check would have to be your 9 to 5 would have to pay you $50,000 a year. I mean, a paycheck to earn $1 million in a year. We have to start thinking like this because now we can start to have solutions.
Got it.
The reason as to why we don't have solutions is because we're not asking the right questions.
It's true.
The question is, how do I become a millionaire? Okay, well, if you have 20 chances to become a millionaire this year, each check is going to have to be $50,000. Right. So instead of focusing on the lack of that 20 opportunities, why not focus on the abundance of 200 opportunities, right? Because now having 200 opportunities to make $1 million, right? And especially making money with money. Right. With the 20 times or 26 times a year, right? You're getting paid. You're leveraging your time, which is still a limited resource. Right. Now, leveraging time, which is a limited resource, over the 20,000 is already an impossible task. You're now saying you're using your time to make $50,000 a paycheck. Right. Now, if you have 200 opportunities, which is a lot more than just 20, right?
Yeah.
200 opportunities. Now each check only has to be what? $5,000. So that would mean you have to make $5,000 a day, right? Now, is that possible? It is possible, especially trading money with money. Is it probable? Potentially, as an experienced trader that's maybe been trading over 10 years.
So it would be $5,000 times 200?
Correct.
$5,000 how much?
Which is $1 million.
Got you. Okay. So that's the cap. That's how much you can't make more than that.
It's not a cap. We're just using it as an example.
Got you. Okay.
We're using $1 million as everybody usually wants to be a millionaire.
Yeah.
At least as far as having $1 million in a year. What it looks like as a 9 to 5 worker is having a $50 paycheck 20 times.
Yeah.
As a trader, it looks like earning $5,000 a day for 200 days.
So what happens the other 165?
So those are your weekends and stuff. And when I say 200 days, that's just me rounding. Really.
Got you.
Because like I said, you have still holidays as well within that.
Leap years.
Yeah, and stuff like that, right? Okay. So it's a little bit more than 200. I got you. It's probably about 250 maybe. Okay. Right. But I'm just using round numbers just so that we could keep the math consistent, right? So 20 paychecks versus 200 opportunities. Yeah. Now it's just about what you want to do now. The 20 paychecks includes traffic, your manager, your boss, yelling at you potentially not even working something that you want to work, right? You have that. But then your 200 opportunities, you could trade, especially with futures trading, the market is open 20, 23 hours a day during the weekday, right? During the weekdays, right? So you have 200 opportunities within that period of time to make money. The question is, which side do you want to be on? Now, I would say consider both. If you do have a 9-to-5, you could still decide to be a trader and work yourself so that your 9-to-5 can then be your side hustle. Because that's what I did. That's how I got into it, right? So if that's your approach, then that's how you would go about it. But it's just about that. Like, am I gonna make $50,000 every paycheck? Probably not. But I can get close to making, even if it's not $5,000 a day, if you make $500 a day, right? That's $100,000. True. That's $100,000 for the year.
As of SSA.gov, as of last year, September 2023, the average for the Black individual male makes $42,000.
Wow. Right. Now, let's use $40,000 for instance. $40,000 over 200 trading days looks like $20 a day. Sheesh. From home. So if you want to make what America is saying is the average Black male, which is $40,000, all you have to do is make $20 in the market. That every day.
When you put it in that perspective, that's kind of wild.
It is kind of wild, right?
That's kind of wild.
Like I said, specifically because with the market, making $20 is like really nothing. Yeah. Especially, like I said, making $20 a day is really nothing. We have our students making, like I said, the milestone we say is $1,000 in a day. So becoming a proficient trader, especially trading with us, it's more than possible to do that, but then the key of it is just making it consistent over time.
Got you.
Yeah, we did a lot of math today, bro.
I'm about to say, this is definitely dope, man.
I'm proud of this, y'all.
I'm proud of me.
He did a lot of good math today, y'all.
To my students, if I start hitting y'all with math problems, blame Wasi, man, because it wasn't me. I already got some lesson plans coming up. Like, do you know why you can't be a millionaire? Because you're only getting 26 paychecks. Let's do the math. Yep, you got to get 50,000 in. Yep. You see,
there you go. There you go. Look,
this was
we learned a lot today.
This was dope.
Yeah, man.
And so if people wanted to, join your program, learn more about you, follow you, do anything like that, where could they find you?
Yeah. So, like I said, we are Option Snipers University. So you could just, options is plural, OPTIONS. Snipers is also plural, SNIPERS. And I'm sure you'll link everything at the bottom. University.com. So you can go on that link. You can also just try schooltrading.com. SKOOL trading.com. That could also link you guys to us. If you would want to learn in person, then you definitely want to try and sign up very, very soon, because this isn't something that we're going to be doing for a long period of time. But we typically see traders, especially new traders that literally know nothing about the markets, literally hit the ground running just simply from us being above them and like kind of shepherding them through the trades. Right. So if you would want to do that, like I said, just go to schooltrading.com. You could also link me on Instagram. That's Wasi, WASI.AKIN. Just send me a message. Let me know that you watched the pod so that we could, grow and learn together.
Most definitely. There y'all have it. Make sure you tap in with them. Make sure you follow. This is another episode of Attractive Mindset. Make sure you like and subscribe. Share this with people. Don't keep this information to yourself. Listen, we learn math problems here. I haven't done math problems since high school, middle school, whatever. But make sure you tap in and tune in. And as we always say, we look good. We live good. Life is good. Talk to us. We talk back, and we out.